The most recent Fraser Valley Real Estate Board stats are out, and I have not done a deep dive into the city of Surrey's real estate market in some time now. So that's what we're going to do today, and that makes this video the Surrey Report. So today we're going to do things a little differently, just going to dive straight into what I'm seeing in the marketplace, stats heavy video. You're going to see exactly what's going on, and I'm not going to have anything cheeky. Well, I might have some cheeky things to say, but let's hop into it here. So I just want to point out that 7,618 active listings as of shooting this video are on the marketplace. That's about 1,000 more than what is a healthy market. So we're definitely swaying towards a buyer's market, but you're going to notice that this number is a little bit different than reported in the stats. That's because this number is resale units, and it does not include rentals or commercial properties and those sort of things. Hopping into the stats package, I'm just going to focus here on the grand totals in the beginning, and then I'm going to get right into Surrey. So this is the entire real estate board area. You're going to notice that year over year, we have a dramatic decrease of negative 25% in the monthly stats of sales. New listings are up 11%. And look at this, we got average price that is coming down across the entire board year over year. And look at that change from just last month, average price is down. But here's where I want to focus on today. This gives you a general idea of where the market is going. So when we talk about month over month, that's one thing, but this is the year to date stats. And you're going to see here, we are down 20% in sales since this same time last year. So this is the first 2 months of the year, almost 2,200, just over 1,700 this year compared to last. So what we're seeing is just a massive slowdown in the total number of sales. Last year was gangbusters out of the gate, at least for myself it was, and then it slowed down later on. This year, we seem to be seeing the reverse of that. Everything that's going on out there in the economy and the trade war, or whatever you want to call it, it's just causing uncertainty, and there's not many sales happening. But that's not stopping the listings from coming to the market. So if we're up 26, almost 27% in new listings coming to the market and down 20% in sales, that means we are going to be in a slow market for the foreseeable future. Now, I'm going to really break down Surrey combined, but I just want to look at the general overview of detached townhouse and condo, just so you can understand what we're looking at. So the year over year sales are down 32% in detached in Surrey, but benchmark price is holding pretty firm at this moment, and average price year over year is actually up. So this average price being up continuously means that we're probably going to see prices increase, but it also does mean that I think more people that can afford higher end properties that are less affected by what's going on in the economy are buying those higher end properties. It is the lower end properties, particularly the condo market, seems to be suffering. However, when we get into the stats later on, I'm assuming what we're going to see is the fact that the detached market is registering in many places, and maybe not across the entire board area that we won't be focusing on, but in the detached market in many places is looking like the tougher spot to be. Townhouses year over year are down 4%. However, that is a really telling number. So what I'm seeing out there in townhouses is those 3-bed tandem townhouses, and then the 2 side-by-side garage 3-bed kind of bigger townhouses. Some of those at the peak of the market were $1.2 to $1.3 million. Now we're seeing them all under $900,000. So these numbers are actually very reflective in the average price. Yeah, that's what it is. Average price of where the marketplace is. And then we're seeing the benchmark price coming down as well. So townhouses seem to be in tough. There's lower sales happening. Of course, you're going to see a higher sales ratio over last month because January is generally slower than February. And then condos. Condos seem to be the craziness in the marketplace. Condos are down. There's nowhere that condos aren't down that I can really tell from looking at, let's call it from the same time last year till now, particularly areas like Wally or investor heavy areas. Those places just seem to be getting beat up like crazy. But average price is up 6% in a year. How is that possible? I don't know, because I like to refer to the benchmark pricing, which I think is more in line And I mean, this is where I see reality. We're down, if you want to call it $20,000 on the average condo since this time last year. I think that's probably about right. Now, let's hop into just so you can see what we're looking at here. So this is again the city of Surrey combined. This is all three property types. And I'm going to scale out to the max just so you can see where we've come. So the benchmark pricing actually started being recorded in 2005. Average pricing goes back further. So I like to focus on this. I don't think there's a lot of need to go back more than 20 years. It's just going to be a lower scale anyway. But you can see, just as a quick recap, if you're brand new to the channel, we had the 2008 run up and then a 10% fallback. Then we were really sideways for a lot of years. Look, from 2008 till 2016, condos were completely flat. We had the big run up of the foreign buyer news. And then we had kind of the fall off of a bad economy in 2018. Then, of course, we went into a good or better economy heading into 2020 before the pandemic. And then you had all that pandemic spending, the pandemic crash. And although here on the blue line, which I'm going to say looks like, big swings, and I guess it is, the detached market really has not super changed since, let's call it about April of 2 years ago. However, that little bump from April till July of 2023, you're still talking like almost $100,000. So it's big swings. However, in the overall scheme of things, when you look at it, not so much. Look at this condo pricing, basically the same thing. From, let's call it August 22 till now, condo pricing might as well be the same. Let's zoom back in here so we can just take a look at the last 3 years. Let's go 5 years. 5 years is a little bit more fun. Looking at median pricing, if you are that person that likes to just look at the center price of all the sales, you're going to see the same kind of trend for the most part. You got a super flat condo market, nothing really changing. This is meaning to me like the good condos are still getting lots of offers. The cookie cutter, central city type stuff, it's really getting beat up quite bad. But the reason that obviously you can't look at things like median price with that much, or I wouldn't weight it towards looking at median, is just look at these massive swings month to month. Obviously, the market doesn't move like up and down in the same way average does. I mean, average is telling the exact same story. Let's call it since April 23, we've basically been flat and detached, and we're, for all intents and purposes, flat for the last 2.5, 3 years in condos as well. And I mean, townhouses are not that far off. But what is changing is sales. Take a look at the amount of sales happening now compared to where we have been previously. Maybe I'll scale out on this one again for you. Now, sales are turning up a little bit. And again, townhouses are green, apartments are red, and detached is blue. But I mean, we are, 2023, January was just as low, but there was a lot less inventory. Obviously, you had the pandemic, which, had even, I guess, less sales back at that point in time just because of lockdowns, and then it absolutely took off. But we're at pretty low amounts of sales. We had 2019, 2018, end of 2018 going into 2019. That was really, really tough market as well. And that's about where we are right now. The difference there was condos was a lot lower than everything else. And it looked like detached kind of stayed out of it. And now detached is actually the lower amount of sales. Look at that. Detached sales in the city of Surrey. This is the entire city of Surrey. There's only 124, and there was 126 apartments and 146 townhouses. So the amount of sales actually happening seems to be happening more in the townhouse market, but that's pretty even. Usually there's a little bit more of a detached. Like for instance, look at here, May of 2017. You were seeing almost a 60 or 70% increase in the amount of detached over top of the other two. New listings coming to the market. They seem to be kind of tailing off for February, which is, I guess, a good thing if they start to come a little bit slower. However, I mean, this is just seasonal. You're going to get this type of swing. Active listings is much more telling. So the difference between new listings and active listings is new listings are just the new listings coming to the marketplace. Active listings are all of the old ones that didn't sell piling up on top. Or sorry, the new listings are piling up on top. So we're starting to see that creep up. December or January is always the bottom for the amount of active listings. But look where we were in December of 21. This is back when there was almost nothing available. For instance, December of 21, there was 137 townhouses on the market, and that's why prices spiked. Now there's like 5 times that, 4 times that. So we're just seeing this inventory pile up, and I'm going to go back out here for the max for you so you can see. I mean, it's nothing crazy, but let's go back a little bit, and we're kind of in that slow after the financial crisis type of marketplace for townhouses right now. But the detached market is actually the one that seems to be shooting up more than anything. Now, there's always been historically a lot more detached homes, and now they're switching. So this kind of also does make sense. Don't let this alarm you so much, because there are detached homes being removed from the marketplace and they're becoming townhouse sites and they're becoming condo sites. So that's what we would expect as we get into more density. You're going to see these bottom 2 lines probably eventually really start to surpass the blue line, which is detached homes. Months of supply. I want to get in tight on this one. Months of supply, just so you know. Let me kind of break it down for you here. This 4-month here, see this line? This line here is basically where we have what we would refer to as a balanced market, where prices are staying flat. Well, for a long time, we were well below prices staying flat, which means prices were going up. And now look at this. We were back in September, 10 months of supply in detached houses, and we're heading back that way very, very quickly. It is strange, however, because I find when I have a detached house, it seems to get a lot more interest than our apartments and our townhouses right now. However, apparently, if you believe the numbers, the townhouse market is currently the strongest. And then let's look at average days on market. Now, average days on market seems to have fallen off a cliff just last week, but the detached market in January was looking at 40 days on market. That's unheard of over the last little while. I mean, you might have these 1-month spikes, but generally speaking, I think if I made this 12 months rolling, you would see that this is a general increase in days on market, which is exactly what we're experiencing. Let me move this out. So this is more of a smoothed out metric, so you can see what the market's really doing. And generally speaking, let's go back to, 2015. It was very common that you had a much higher days on market, detached at being a month, apartments a month and a half back then. It was very common that you'd be 45 days on market before you sold. And then we went into, a week on market throughout the pandemic. Now we're still at, let's call it 2 to 3 weeks. Generally speaking, that's not a bad marketplace. It's just a heck of a lot worse than where we came from and what we got used to over the last little while. So let me know what you think of the numbers. I think there's a lot of supply out there. I think there's going to continue to be downward pressure out there, but there doesn't seem to be a lot of that reflecting here in the numbers. So let me know what you think down below, and my next video will be a more regular one, but this one's just for you stats nerds. Subscribe to the channel, click the like button. We'll see you in a couple of days.